what can you learn when you get to pick the brain of the CEO of an incredibly fast growing company who also has the unique perspective of being behind the scenes of thousands of brands? I'm so thrilled to bring this conversation with Erik Huberman to you today. You are listening to the Brand Gravity Show. I'm your host, psychology-driven brand strategist, Kaye Putnam. In today's conversation, we get into the marketing framework that Erik uses with all of his clients to create incredible results. But I think the most interesting part of our conversation is discussing what is going on a context level for the entire market. How are businesses adapting to economic headwinds? How are they making sure that they are not just surviving, but thriving in whatever economic environment that you are in? So stay tuned for that. Erik Huberman is the CEO and founder of Hawke Media and CEO and co-founder of Hawke Ventures, where they invest in other businesses. Erik launched Hawke Media in 2014, growing the company value to over 150 million and working with over 3,000 brands worldwide, including Red Bull, Verizon. Eddie Bauer is the fastest growing marketing consultancy in the United States. On the fund side of his business, Erik has raised $25 million, and they've also launched Hawke AI even before all of the hype that AI has been getting here in the last several months, and has helped over 5,000 companies benchmark their marketing analytics, business analytics to improve results. Before all of this, Erik built and sold 2 e-commerce businesses by the age of 26. And as a serial entrepreneur, national bestselling author, and marketing expert, Erik has been recognized by industry peers with honors and awards, including 30 Under 30 by Forbes, CSQ's 40 Under 40, and Inc. magazine's top 25 marketing influencers. Let's get to the conversation. Erik, thank you so much for being on the Brand Gravity Show. Because I love a good brand origin story, can you tell us a little bit how you founded Hawke Media and where you came from?
Sure. Background's e-commerce, built and sold a couple e-commerce companies a little over a decade ago, and then started advising and consulting for a bunch of brands while I tried to figure out what I wanted to do next, and found that the marketing landscape is just completely broken. It still is. It's 99% of agencies out there have no idea what they're doing in marketing, have no idea how to build a brand. And the few that are good tend to be really expensive, want long contracts, high minimums, and just the whole thing is opaque and challenging. And I've actually created like a little personal test here that I love to ask founders, like, have you ever dealt with a bad agency? And I've yet to hear someone say no. So through that, I was like, okay, this is really broken. Someone needs to build something that actually is focused on the success of companies, but also flexible, nimble to work with. So like the best at what they do, but easy to work with. And so that's literally what came up. I built a little SWAT team to help the brands I was advising for, each with their own expertise, like a Facebook marketer, an email marketer, web designer, et cetera, and made everything flexible, nimble, and started there. And now fast forward 10 years almost, we're like 250 people. I've worked with about 4,500 brands, big and small, and still continue down that same path. We just got rated the best performance marketing company in the country by Digital Marketing News.
Congratulations. That's amazing.
Yeah.
And along the way, you wrote the Hawke Method book, which is fantastic. Can you share the key insight from that book to get people excited to read it?
Sure. It's basically, my favorite was the first day it launched. We got a 1-star review on Amazon that said, "I don't get it. It's just modern marketing 101." Like, no, you got it. That is the idea. Like the idea of it is it's a framework and overview of like for a CEO or a head of marketing to be like, how can I assess where the opportunities and threats are in my marketing? Like, how can I do a SWOT analysis of my marketing and know where to dive in and where to attack? And so we talk about there's 3 pillars of marketing: awareness, nurturing, and trust. Awareness is what you do to introduce new potential customers to your brand or company, things like advertising, PR, word of mouth, et cetera. The second piece, nurturing, is what you do from the point that you introduce them to the point they actually purchase, and then post-purchase, so that you're helping accelerate that purchase decision, you're helping increase your conversion rates, you're helping increase your lifetime value by staying in touch. And then trust, because there's a study that 75% of people don't purchase from a company they don't inherently trust. And so what that means is when they don't know who you are, it's third-party validation, testimonials, reviews, PR, endorsement deals, influencer, et cetera. Over time, it's consistency through brand. And so it talks into detail about what tools you use for each of those and how it works and all that. But yeah, that's really an overview of the book. Came out a year ago. We've sold about 30,000 copies. It's been fun.
Heck yes. And like you said, you've worked with thousands of brands now. Do you have a favorite that is a case study that applies maybe one or more of those pieces of the framework?
Well, they all apply it because like that's how we work. So if we're coming in, they literally, that's where the book came from, was, at the time, like 7 years of doing this all the time. In terms of, definitely no, I wouldn't say favorites. Like I will say that like my first investment I ever made that we've also worked with is FabFitFun, which also started me on the investment route, which is fun because now we are on our second venture fund and we invested in dozens and dozens and dozens of companies at this point. And they're just super fun to work with. They've built a great brand and a great company, and it's obviously gone very well.
Yeah. Yeah. Amazing. Yeah, I love that you have both the perspective of working on the agency side plus looking at businesses as an investor. I feel like that gives you a really unique perspective. You mentioned that a lot of people don't know how to build brands well. Is your framework the answer, or is there more to it? What are you looking for when you're trying to build a fantastic brand?
I'd say my framework is the answer from the marketing function. I
Right.
think to build a great brand, to me, brand is anything you're consistent with, along with what you talk about. It's those two pieces. And so the example, I give a bunch of examples, but like, again, early on when you haven't built a brand yet and you're not known yet, it's all third party. It's what other people say about you. And so that's where, again, if you want to control the conversation, getting great press or endorsement deals, all these things help you talk about what the brand is. A lot of times, another way to do this is to just say it yourself. Are you familiar with Zappos?
Yep.
What are they known for?
Customer service.
Why?
I don't even know why.
They
It's
wrote
built
the
into
book,
their
just
brand
delivering
value.
happiness. It's
Yeah.
because they said it themselves. Now, by the
Yeah,
way, they
exactly.
do deliver on it. Like there's a point where you can be found full of shit, but they wrote the book Delivering Happiness and talked about all about why customer service is their number one priority. And they preach that and preach it and preach it. And what happens is people are simple. Like we have a confirmation bias, and it's one of the most powerful tools, and it can be used for wrong. A lot of times in politics, that's how it's used. But with Zappos, if I tell you we're the best at customer service over and over again, then you're going to start believing it. And then when you have a good customer service experience, it's going to confirm that. You're like, see, they're great. When I have a bad one, I'm going to probably give the benefit of the doubt and be like, maybe that was an anomaly. That person had a bad day. There's got to be one bad egg. It's not that Zappos sucks because they're still incredible at customer service. That's my bias. I believe that, and I'm going to confirm that. And so if something challenges that, I'm going to believe it's an anomaly. Same thing happens the other way. Cox, Comcast, Verizon, AT&T, all known for horrible customer service. So when you get on the phone with them and they don't treat you well, you're going to see, I knew it. They're horrible at dealing with their customers. And then when they do treat you well, most people will go, oh, at least there's one good person there. Like that's how people work. They're looking to confirm that bias. So, again, a tool to do that is to talk about what you're trying to confirm yourself. And I'm just going to say it and no talk to my own politics, but Trump did it with Make America Great Again. Like he said it over and over again to the point that a lot of people started believing that he's going to make America great again. There was objectively no substance to what he was saying. It was just the statement. And still, people believe it. So when it comes to building a brand, that's what I mean by what you talk about. And then it is what you deliver. So like McDonald's, they didn't talk about having unhealthy food, but they became synonymous with like the obesity epidemic in the US because they're unhealthy food and make people fat. And now they're known for it. So when you think about McDonald's, most people think fast, you have whatever your opinion is of the taste of their food, and unhealthy. Like that is part of it. It's really hard to get away from. And so again, the brand can be good or bad, and it has to do with what you talk about and what you're consistent with. Again, like it's the same thing with the telecom companies. It's not like they actually advertise that they're bad at customer service, but over time, they've just given that experience so many times that that's what they're known for.
I know. When you're working with a new company, how do you decide what that key message is going to be for the brand?
It's usually a lot of times, what is the aspiration? Why are people going to buy from this company? And I always like to make sure people understand that people only buy something because they're aspiring for something else. Like if someone is perfectly content, I mean perfectly content in where they are, they don't buy anything. They don't.
Right.
Like if in this what looks like interrogation room that I'm sitting in, that's my new office. If I like sitting here and I don't need anything and I am literally 100% happy and satisfied in this room, I'm not going to get up and leave. I'm not going to buy anything. I'm going to stay in this zone. And so when someone makes a purchase, it's because they're aspiring for a change. That change doesn't have to be something huge. It could be, I have holes in my socks and I just want socks without holes in them because either it's uncomfortable or it's bad fashion. And so that's an aspiration. If I buy running shoes, it could be, again, it's not because And doesn't necessarily because like I need to change a habit. It's just like my old running shoes are old and I need new ones because I want to be again comfortable or fashionable. So if I'm again a running shoe company and I'm trying to figure out how to position myself, well, people buy running shoes. Is it the fashion motivation? Is it comfort? Is it exercise? Is it fitness? And figuring out where I'm going to sit in that world is really
Mm-hmm.
important. And then all your messaging around that feeding into that because I think like I'd say Athletic Propulsion Labs, APL, the shoe company. Those guys are great and know them well. And I think they went more the fashion route than they went the athletic route, even though they were like originally banned by the NBA and that's where the company started. And so it's figuring that out and then creating all your advertising, your content, your messaging all around that aspiration is really what can help build the brand in the right direction. Again, Zappos knew it's not like they're selling shoes, but like the reason people buy from them is not because they need shoes because if they need shoes, they have 70,000 options. They're buying from Zappos because they're sick of the customer service from the other shoe companies and they want a place where they can trust. They already trust, like Zappos was selling Nikes. Nike already built the brand for that shoe. So I don't need to sell you why you need a Nike. You already know. It's just why you're going to buy it from me is my challenge. So like there's also two dynamics in the way businesses work. It's either why you need this period or why you need it from me. And people already know they need shoes. Why are they going to go to Zappos? Because they have the best customer service. So that was the brilliance in that.
Yeah, super brilliant. It's more of the distribution and the actual experience that people are having with that transaction that Zappos had control over. And they smartly, intelligently built a brand around it. I love that example so much. You also built a piece of software that's driven by AI. Super curious to learn more about it. And I would also, tell us what it does first, and then I'll ask my follow-up question.
And I hate that it's like on the hype train now because we launched it a year ago before like OpenAI came out and everything. And it's like, now I like want to change the name because I hate that it's in that, but it is what it is. But I spoke at a TEDx talk. What was that? Like 8 years ago on how AI was going to affect marketing. And I did my research. I'm not I researched what other people were studying. I don't want to be like, I'm not a scientist in AI, but it turned out all the things I researched and all the things I read became accurate. So it's recorded. I think it was 2016. I was talking about how by 2023 is when computers will be able to process at a level that will create what feels like AI. But then it will take another 6 years to 2029 to actually teach it to the level that it can actually think like a human. So that study that I did was really interesting because it coached me on, okay, so that's an interesting point. Like computers now can process at the level of a human brain. That's what it took. So we're there. And so now what you need is enough data and education so that it can actually have all the context to think, well, how do you get all that data and education? Well, there's big companies that have it, which is why like OpenAI is working with Bing and Google has their own and, et cetera, et cetera. But I don't have those. So those big guys are going to win in some ways, whether through partnership or their own platform will have the biggest AI. But for what I wanted to create, I looked at, how is this going to disrupt marketing? And it's like, well, on the creative side, and I know that we have generative AI creating images and content. And it's funny, everyone that I hear say like, oh, we're just going to use AI instead of our content team now. It's like, so you must have had a really shitty content team because this is like mediocre content at best. And like flooding the market with mediocre content does not make your brand better. So if that's the strategy they were using, that's going to go away. Like that's going to be, everyone's going to flood and then everything's going to go away. And I don't think that that'll be that compelling, but it's a great prompt tool on that side. But the more data-driven logic side is very replaceable with AI. And so what I look at is all the data work we do, all the insights we try to derive, all the analytical work we do, that can be replaced by AI. And so but how? Because and this is where one of the biggest problems for brands lies, which is when you're looking at your own data without context of what's going on in the market, it isn't helpful. So I always use the comparison of like the public market indexes versus your own portfolio. Like wealth managers love to peg themselves against the S&P 500. If they're outperforming it, they're doing well. If they're underperforming it, they're not. And so what's good to remember about that is like, I think last year the S&P 500 was down 17%, if I'm not mistaken. So if my stock portfolio is down 10%, in a vacuum, I'm like, what the hell? I invested with you and you lost a tenth of my money? Like, and I'm paying you? This is bullshit. But if you lost a tenth of my money and the rest of the market lost 17% of their money, well, okay, that sounds a little better now. That's interesting. So no, it's crazy because like this concept of benchmarking and data and insights hasn't really been that big of a thing in the marketing world. And so
Yeah.
starting 8 years ago, we started collecting pipes into companies' marketing data, revenue data, et cetera. And we ended up at this point with about 8,000 companies' data running through our pipes in real time. We then bought a software company a year and a half ago called Morpheo that had built a dashboard and visualization tool to manage campaigns and agency. It was like an agency dashboard. Then we plugged in the insights, we plugged in the data, we created a benchmarking. So now we can plug in an individual company and actually show across every KPI and media channel. So like, whether it's Meta or Google or TikTok or Pinterest, even email marketing, Google Analytics, Shopify, et cetera, we can show in real time how you're performing against the market. So your Facebook ads are performing down 10%. Well, if the market's down 20, it's not a problem with your Facebook ads. But if you're down 10%, the market's either flat or up, yeah, you're probably doing something wrong on Facebook. It's those kind of things that we can now see in real time. And then we plugged in OpenAI because we were waiting for a platform like that. So now it can be naturally language processed. So you can actually communicate with it, what's going on in the marketing, where are we missing, et cetera. And that's what we built out.
That is amazing. And yeah, historically, that data was really hard to find. You were comparing yourself against yourself. And then that, like you said, that gives us limited intel or limited insight. So having that benchmark is massive. What kind of company most benefits, or like who's your ideal client for the software?
It's honestly any brand spending on digital media. It's crazy not to have that data, and we haven't priced it too high. So the idea is like, if you're not using that data, you're flying blind. It's ridiculous. Again, it's like managing a stock portfolio without any index or watching the market.
Yes. Okay. Changing direction a little bit. Apologies, a little ADHD here, but Hawke Media as a brand has grown so much in the last 5 years, we'll say, last couple of years in particular. How are you maintaining your brand consistency and like your culture as you've expanded to 250 people and so on and so forth?
Yeah, I think, culture trickles from the top. So how we operate as leaders is how the rest of it. So, what you manage to is what people hold it's a great example of this is like, we had a problem with client churn early last year, like everyone, because the, recession or whatever the hell people decided to call the past year and a half. I heard asset recession. I thought that was very accurate. The value of assets dropped across the board significantly. So that seemed pretty accurate. Other than real estate hasn't done that much yet. So client churn. So then we looked and like it was getting bad. So we just said, hey, let's emphasize retention. Like let's not take this for granted and just go, oh, it's a recession, people are going to cut. Let's not accept that. Let's save clients. Let's find ways to do it. And we started from myself to my partner and president to our head of services. We're like, we're not. And I kept saying the words like, we don't lose a client. And that doesn't mean that it's not going to happen, but let's never accept that it happens. And lo and behold, our retention of customers has never been better now. Like we don't lose clients. Like it's like, we took it for granted before that like sometimes there's a line in Mad Men that the day you sign a client is the day you start losing them. So like we always quoted that and it was like, we love to keep clients, but once in a while you're going to lose because it happens. And now it's like really diminished. And again, we have 500 clients, and the fact that like the churn is negligible now, it shows that like I don't believe that's a market function. I believe that like just in emphasizing it as a culture, all of a sudden people stopped accepting it and started fighting just a little bit more, and that little bit of fight has changed the whole business.
That's amazing.
What the values we talk about, what we emphasize, what we manage to becomes the culture.
Yeah. Do you have any words of wisdom for CEOs that are in high growth mode for surviving and thriving?
Oh, I'm trying to think of like many, but I think I've learned a lot of lessons the hard way. But make hay when the sun shines. If you're in high growth mode, keep growing. I don't believe in this. Like, I think people get self-sabotage and get scared. And to me, it's like, go. Like, you should, if you're growing that fast, I'd say one piece, make sure your unit economics are there. Like you're growing because you raised a bunch of money and you're dumping money. That's really can end in disaster. Like if your unit economics are there and they're like, you could always be profitable and still have some decent growth, I would just go for it. And then the key is like wherever you're getting bogged down, hire, like go build out teams, do what you need to do. Like, don't get underwater. And I always found, and it's not always perfect, but the moment I have to do something over and over and over again as the owner of the business, I need to hire someone to do it. Because if it's not worth hiring someone to do, it's definitely not worth my time either.
Yeah.
And so that's a really important like lesson is like, anything that's taking up a ton of your time, if there's like a specific thing, you need to be replacing yourself over and over and over again, and then replacing those people. And that's how, frankly, you scale responsibly. But again, unit economics with high growth, then it's just keep pushing because, and I learned that from, I have some close friends, mutual friends with Ryan Seacrest. And once he had his radio show, he then got American Idol, and then he just started working, and he hasn't stopped because he's like, because things run out, you never know. And that's something that means more to me now than it meant even when I first heard this, whatever it was, like 18 years ago or something, where it's like, you don't know when you're on a rocket ship, don't take it for granted because it may not last. Then it also can open up a lot of opportunities in the moment. So like, don't squander that situation. Don't lose focus. Go, go, go. Don't hold back. That's my view of it. I'm sure people would argue with me, but I believe we control way less than we like to think. And when you have a rocket ship like that, it's a lot of times market conditions as much as it is your own personal great idea, et cetera. And those market conditions change. And a lot of, venture-backed companies learned that the past 2 years. The amount of bankruptcies I'm seeing and the amount of companies faltering, it's basically the next 6 months. I think we're going to see a lot of tech companies go under because they stopped being able to raise money a year and a half ago. Most tech companies function on 18 to 24 months runway. That runway is running out and venture hasn't really opened up much. It's going to get ugly for a lot of those companies. Yeah. And the companies that pushed and grow and again had unit economics are fine. And when we invest, we look at that. So like, I'm speaking at this from like an investment perspective too. It's like, if the market wants what you have, you better do everything you can to get in front of everyone immediately. Get the scale you can when people want it. And then, because, it's not usually, unless you have a really replaceable business, and that's not a great business. Once you onboard people, you're not going to just go way backwards in revenue. So if you're able to get to a certain point because the winds are at your back, and then you hit some headwinds, you might have to work a little harder to like maintain, or you might decline a little bit, but it's really rare that you just completely go away unless you've overfunded the company or you're in a bunch of debt or something. That's the only other factor. But for the biggest thing I've learned also the past year and a half of watching this shift, because I graduated college in 2008. So the last recession started at the bottom. I didn't know what it looked like to fall. I went into real estate a week before Lehman Brothers collapsed. So I didn't really know the difference. And so watching this time around and of hearing about recessions the rest of my career, but there hasn't been one in, whatever it's been, 12 years. It's interesting to see a few things. One, how people love to tell the extreme binary stories of like all the companies failing. And you're like, now that we're in it, it's like most companies, it's just a little slow, which is stressful, but it's not. The economy doesn't stop in a recession. It just slows down a bit. And it's not even that much. You have like negative 2% GDP growth. And it's like, that's a recession. So in 2 quarters in a row. It's like, okay, so everything dropped 2%, like across the board. It's painful because you're probably trying to push really hard to keep your market share, but it's not that big a deal. And so seeing that, what I've learned is there's only two reasons that I found that companies fail. And the more basic one is you end up underwater on financing, whether it's you can't service the debt and the debtors end up owning it, or you raise a bunch of money and you'll never make any money. So why would you continue? Because they all have preferred returns or something. That's one aspect. The only other reason companies fail that I've seen is the leadership gives up. And so when you talk to a lot of, long-term successful people, you hear things like never give up, keep pushing, having grit, all these things. I think we take that in a vacuum, but when you look at it, it's like, there's always an option for a company to survive that doesn't have any debt to service. You can literally get down to by yourself running your business. Like there's always an optionality there. And I think what we see in, again, these kind of recessions is it's just the people don't want to do it anymore. And so you see a lot of businesses going under because they've either raised the money they want to, they're underwater, whatever. And they're just like, we're done. Like, I can't do this. And so there's a lot of, as a CEO, it's also recently had me look at emphasizing the idea of like self-retention and, keeping yourself engaged, happy, good, which means don't grind yourself to the bone and burn yourself out. There's no sustainability in that. And sustaining, Charlie Munger, one of the best investors of all time, talks about the way to get rich is just to not lose money. So just keep growing and building and don't lose money. And so it's about sustaining. It's not about always maximizing growth, because in some markets that's just not going to happen. And then when it does, go for it.
100%. Yeah. Companies big or small, if you are sustainable, especially as, say, like a solo founder, if you are making sure that you are pouring into yourself so that you can continue running your business continues to run, like you said. And it's something that has been really important to me as well in making decisions for my business. It's like, what's the long-term choice here? What's the sustainable choice that's going to keep me alive? And by
Because
prioritizing
again,
that,
there's times when you need to survive, and there's times when you can thrive. And it's like,
yep.
just get through the survival periods, get through them, and then you can get back to thrive.
Yeah, I love it. Thank you for being the voice of reason there, because like you said, it's so dramatic, like the whole news cycle around the economic condition right now. And that hasn't been my experience either. It feels relatively normal. Tell me, what are you excited about right now?
A few things. I'm excited about, we're now working with, we've always been a small and medium business agency with some big brands, but we're really, the larger enterprise side has really opened up for us. We're managing like, some great mid-market brands like BB and Kenneth Cole and Scotch and Soda and like Chinese Laundry, like really fun brands. But now we're starting to work with like Casamigos, and which is Diageo, and we've worked with Unilever and Nike and these guys, but we're starting to like realize that with this AI tool and our breadth of experience now, it takes a lot of time to build the credibility to get into those. And I think we're there because now we're in the market, people know who we are, all that stuff. So that's been really exciting because it all comes from that AI piece that is really compelling. So watching that grow along with the market opening up, I'm also just excited to be, I think in the near term coming out of this recession and people actually being a little more proactive is like how I like thriving. So like surviving the past year and a half was great. Not really, but we did fine. But I'm excited to get into like hyper growth mode again myself. And we've been doing a lot of M&A and all those things. And then our venture fund, thankfully, like the way we invest ended up being very recession resistant because like, the multiples dropped on all these companies, but we get in early and maximize our upside so much that we're fine. Like we're showing great results on the venture side. So I'm excited all around, honestly.
I love it. I love it. Selfish question. I feel like one of the things that you do exceptionally well as a CEO and as a visionary of your brand is securing press and visibility for your brand. Do you have any words of wisdom for founders who are looking to go that route to do that attraction piece?
Yeah, you got to be really realistic with what's exciting. Like people always think that they're excited. Like, this is the problem for all PR companies, why we never got into PR. People think they're special. But like you have to really try to be objective of like what is actually exciting for the market to read. Like what is a headline that if you weren't you and you saw, you would be interested in, and give that to the press because they're looking for stuff to write about all the time. But it's got to be interesting. It's got to be compelling. And we talk about like the celebrity aspect, whether it is actually a celebrity or a big brand, goes a long way. So if you can align yourself with bigger companies and talk about like what they're doing with you and all that, that goes a long way because people like to see recognizable brands.
Yeah. Love that. And for the entrepreneur that's listening to this episode, what is one thing that you would recommend that they do to improve their brand or improve their marketing?
I would say, again, it's just speak about what you want the brand to be and be consistent. That's it. It's like, and consistency is the key. Like people think that everybody thinks everything's an overnight success. And it's like, it's they talk about overnight success, 10 years in the making. Like, you just keep going. It feels redundant to you. We talked about the Hawke Method and like the 3 pillars of marketing. I've been talking about that for a decade, but nobody, in the context of things, nobody knows what that is because I've only talked to thousands or tens of thousands of people about it. I guess tens of thousands for sure at this point, but it's not, hundreds of millions have not heard that. So I'll let you know in 20 years if that becomes redundant. But for me, it is, but not for my audience. And I think that's super critical.
100%. The Hawke Method book is available on Amazon and all of the places. Where else should people find more about you and about everything we talked about today?
Yeah, just @Erik Huberman on any social media site or just hawkemedia.com. Super straightforward.
Amazing. I love this conversation. Thank you so much for making the time and for sharing your wisdom.
I would love to continue this conversation. What are you seeing in your market? Are things growing? Are you surviving? Are you thriving? How are you navigating all of the changes happening in the business world right now? If you're on YouTube, just comment below. If you're over on any of the podcast listening places, then find me or Erik over on Instagram and let us know what you think of today's episode. Thanks so much for listening, and I'll see you in the next one.